Hi there. Good morning. Welcome to the trade setup right here on BloombergQuint Live. I'm trying a bit of a stunt here because the Wi-Fi connectivity at my house is just gone for a bit of a toss. But let's try and put out this trade setup today in a bit of a candid format. What the world markets have done is of importance because, frankly, what the US markets are doing are one thing, but the emerging markets are stuck in a session of sorts. So this is what the US markets did, right? Very flattish performance by the Dow, the Nasdaq, and the S&P. All of them almost similar kind of trends. A bit of a recovery towards late trade for the Dow, but that notwithstanding, it was a flattish day, and the futures are kind of showing the same kind of a trend. So no big cues from the US markets, so to say, and the emerging markets. This is beautiful chart on the Bloomberg terminal, which shows how the emerging markets are stuck in a bit of a rut. So look at this. This is the emerging market stock, MSCI EM index, which bounced off support, hit the resistance, and is kind of stuck in a very narrow range. And I'm not surprised here. A lot of emerging markets, and not just India, are seeing some COVID cases. A lot of them are not also, but Philippines, for example, is seeing a similar trend. Brazil has some issues as well. So you kind of seeing this shape up across the EM pack, and which is why we have this spot of bother that the EM seem to be stuck in. Now, what would this mean for the markets? I would reckon more of the same, something that I was reiterating yesterday, that we'll probably bob between the red and the green, up and the down. I don't think there's a clear trend formed here, and you have to be mindful of that. The other big factor is that while there is no clear trend, what to do within that. And I think we'll get to that in a bit. Just quickly map out what the SGX Nifty is indicating for now, indicating a start about a third of a percent in the green, but you don't quite know if that will last or not. Now, from a longer term perspective, Jamie Dimon seems to believe that the positives are here to stay. And he put out that quote in the annual letter yesterday. He says that I have little doubt that with the excess savings, new stimulus savings, youth deficit spending, and a variety of other factors, the euphoria around the end of the pandemic and the US economy will likely boom. Now, this boom could easily run into 2023. Mind you, he's not talking about FY23. We are in 2021 currently. He's talking about this boom running into 2023 because all the spending could extend well into 2023. Now, this is not a small mark. This is Jamie Dimon saying this, and you got to pay cognizance to that. So, the liquidity net and therefore the economic boom net continues to stay for markets. It's just that in the short term, can we pivot away from the pandemic sensitives away towards the more stable names and then come back? And are you able to time that? That's the key question. So what's the trade setup for the day today? I think that's the key thing, right? So as you saw in trade yesterday, the mid-cap strength was evident. But just that for now, temporarily, because India has these rising number of COVID cases, and by the way, yesterday was not a great day either for COVID cases. I don't have this morning's update. It will come in about an hour's time. But the late evening update yesterday was not the most promising one. So as a result of that, the risk reward is not in favor of large cap, which is the Nifty. So you got to ignore the Nifty and probably look at stock specific bottom up story. So that is part one. I somehow believe that while yesterday we had the bank Nifty doing well, and yes, valuations would be in favor, and HDFC Bank at 1450s is very good levels. But I still think that tech and metals are likely to continue their up move despite the recent run up. And positive earnings momentum in specialty chemicals will probably keep the sector very active. We saw yesterday signs of that happening in Avinati Organics, for example, the expectations of a very strong quarter 4 leading to that stock doing well. So it will be very interesting to see what some of these specialty chemical names do in the slightly near term. Flows were nothing to write home about, so I'm not even talking about them. And therefore, I'm moving straight to the stocks that one should focus on. Now, this is a big thing, right? You keep in mind, viewers, Godrej Consumer had a very low base of the last year. So you have to bear that in mind. But that notwithstanding, is this a strong number? It surely is. Consolidated, they say that they will probably grow at mid-20s. This is an FMCG company saying that they'll grow at 10, 11, 12%. He's saying mid-20s, the company is saying. It's consolidated numbers. India will grow around the 30s region. Africa, US, and Middle East, close to 30s. Latin America will remain strong. They hardly seem to have put a wrong foot in the quarter, and which is why I think Godrej Consumer has all the telltale signs of being the stock of the day. Now, keep in mind, everybody is fearful about the rising cases and what that could do to Indian firms, non-tech, non-metals, non-global cyclicals, right? But FMCG in a scenario like this, which actually does well, so Godrej Consumer could well be the stock of the day. But anyways, let's stick to the other pocket, and which is IT. Now, uh, okay, not all of this is CLSA commentary, but nevertheless, let me just put it out. I think the ISG commentary actually indicates a very strong exit order book for most IT companies, and you would probably believe that the IT space at large would stay in a favorable zone. I think there is an indication of a robust pipeline with 4-7 mega deals, which is an incremental positive as well for the IT players. And the ISG commentary indicated that. Remember, we've already seen Gartner sound out the positive bugle on Indian IT. Now, what CLSA is saying is that the strong deal activity in ER&D is a positive read-through for HCL Tech and L&T Tech services. And momentum in financial services and retail is positive for Infosys and TCS. So each of the respective players actually have a fair degree of positivity. The big thing that CLSA is saying, viewers, is that they are positive on large caps and not mid-cap IT now, incrementally, because of the run-up that some of the mid-caps have shown and the valuation differential that some of the large caps give vis-a-vis the mid-caps. Can you imagine that the mid-caps are valued much more than the large caps, albeit they are growing faster, but the valuation multiples over the long term is determined not by 1 year's growth, but by longevity of growth. And that's why some of the mid-cap or the large cap companies will actually, according to CLSA and according to a lot of other people, might do better. You got to just look at the valuation multiples in any report. And some of the reports are published on the research report section on the BloombergQuint website. Pick up any report, a Q4 preview, and look at the multiples of some of the large caps vis-a-vis the mid caps, and you'll get an idea of which are the stocks to bet on. So do that exercise, it will help you. Let's move on. The next one is Prakash Industries. They've achieved the highest ever sales of 2.72 lakh tons of steel. The sales were 8.5% up on a quarter-on-quarter basis, which is strong, by the way, because the last quarter also would have been strong. And on a YOY basis, about 31%. It doesn't surprise. Almost all metal companies are doing well, and why should this be any different? So do watch out for Prakash Industries in this session, and then do watch out for Hindustan Copper. This is, yes, you should watch it as a magnifying glass. Again, a metal company, largely in a strong spot. Valuation's not all that tough, but they've approved a QIP, which the floor price is at a 13.33% discount. Now, would that mean that the QIP will happen at that price? Maybe, maybe not. Could it correct to those levels? Maybe, maybe not. The point is, if it corrects to those levels, would it be bought? I would presume yes, because metals are a strong spot. So watch out for this one. If this starts off really lower, you probably have a winner on your hands. Other stocks to watch, Adani Transmission. Yesterday, a whole host of Adani Group stocks came off. From what dealers told me, is that they saw some buying activity in late trade in Adani Transmission. Not in Adani Total, not in Adani Enterprises, but in Adani Transmission. So watch out for that one. Watch out for Dixon Tech, 4.5% uptick after that Bharti deal that they signed, and could be an interesting stock to monitor in the session today. And Vinati Organics, like I was saying, big uptick yesterday because of the expectations, possibly because of the expectations around the Q4 business. There could be other deals and somebody might have bought as well. I don't know that, but watch out. The Q4 is expected to be strong. In fact, the series of the next few quarters are expected to be very strong in earnings for Vinati Organics. So do watch out for this one. And then some stocks which had some fairly interesting price volume action yesterday and some delivery-based buying that we saw there. So Prince Pipes, 8% gains, 61% mark for delivery. Similarly for Sterlite Tech, fairly strong mark for delivery. Dhani Services, I don't know much about, so I won't comment. But Sequence Scientific and KPIT Tech, again, some pretty strong delivery percentages on fairly strong price volume action as well. So therefore, these are a few names that you should probably watch out for in trade today. All in all, expect a muted or maybe a marginal gains, but mid caps could be very, very active. And maybe that's the pocket that you should look to fish in. Thanks so much for tuning in. Have a safe day ahead. And our attempt at a candid trade setup, I hope it passed the muster. Thanks for tuning in.